Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 5th of July. And rather disappointing on the FTSE 100, where we've had a 3-day failure at the rising 200-day moving average, which is even more disappointing. Risk of a move down to that late March support line projection 73.80 over the near term, while we remain below the 200-day line at 75.45. End of day close above the 200-day line, we could be looking at 7,600 and that April resistance line, which has so far been rather successful in keeping a lid on prices. RSI now remaining below the neutral 50 level. We went near it and then failed, so we haven't actually been above neutral RSI 50 since the beginning of May, which is, I'm saying it's a record, but it's a long time. And in a way, actually, the market hasn't fallen as much as you might have believed it would, given that many RSI failures at neutral 50. On to the DAX, and here we are hoping that it's a better picture than the FTSE. Couldn't really be worse, I suppose. Rising trend channel still there from back in September, probably due a test of it and a test down to the 15,600, 15,700 area, given the way that the RSI here also has fallen below neutral 50. So a little bit of a danger signal there from the DAX, and especially with the basically the triple top above 16,000 since May. So it's not a great look for this market. So maybe something more ominous coming for the rest of the summer there. On to the Dow, which has been celebrating Independence Day, I suppose, over this week. Here you can see that we're frozen in time with the rising trend channel there from March. Rising 50 and 200-day moving averages, which is good. 33,600, the 50-day line, that's the lowest we're expecting this market to dip to. Nightmare scenario would be another test of the 200-day line, 32,900, but at the moment, hoping that we'll stay largely above 34,000, and while we're above that, looking for 35,000 at that March resistance line projection. Moving along to Bitcoin, where we're hoping that this will be a better market than the other ones we've looked at, but still here in consolidation, basically trading either side of the old April resistance. We had a little brief attempt to push higher towards our goal here, which is up to as high as 35,000 by the end of the month, while we stay above the recent support around 29,500. Worst case here is that we have to test the 50-day line at 27,800 one more time. On to the stocks, and starting off with Audioboom, which I think for the first time in recent history has actually done better for the bulls than they might have imagined. So here we had the bottom of the gap there at 227, end of day close above that. We could be looking at the top of that rising trend, with that falling trend channel rather, from back in March around £2.70. It'd be interesting to see whether the market can get up to £2.80 and fill the gap down that we had last month. RSI now at 38, but it hasn't been above neutral 50 since basically February, so a long way to go really in terms of recovery, etc. Even though it has to be said, the bear trap below £2 actually looking quite interesting. 202, 203, the initial June low, and above that we are hoping that we could get up to 270, 280 there as a best case scenario. If you're cautious, you wait for an end of day close back above the floor of that gap at 227. Before taking any action. On to Bezant, where the recent sell-off, it looks as though at least temporarily it's about to end. We've broken back above the 50-day moving average for the first time since, first proper time since the end of last year. Resistance line there from December as well, around 0.04. The most positive aspect here probably is the way that we've got an uptrend line in the RSI window. It's bullish divergence line, and that means that there could be enough energy here to get up to fill the gap towards 0.06 near the 200-day moving average. Best case scenario, maybe over the next couple of months, would be back to 0.9, but given the history of the stock, might be better just to take things one step at a time and look for 0.06 while we're above 0.04. On to a stock which I don't normally look at, the type of stock I don't normally look at, Bisichi, but quite exciting here in the sense that the shares have pushed through the 50-day moving average. They're at £1.97. Above that, we're looking for a rally within a broadening triangle base from February. Best case would be up to 280. A more ordinary progression, probably up towards the 200-day line at £2.45. But upside only valid really while we hold above that 50-day line at 197. So reasonable risk reward on that situation. Theoretical risk reward. On to Eurasia, which is huffing and puffing around the 3 pence area. Still, the main message is we need to break 3.4. RSI is pushed back above 50 after a little bear trap dip, and above 3.4, looking for 4.5 if we ever get through 3.4. We failed there multiple times, but just looking a little better for Eurasia at the moment. Moving along to a stock which I don't think I've covered before, Eneraqua, and here we've got what looks to be a broadening triangle base, broken the line of resistance there from last month at £1.29. Above that, looking for resistance on the way down around 180, well, around 180, and also the top of that triangle from last month in that same area. But nice unfilled gap to the upside, breaking that trend line, and that normally would suggest that we will hopefully not have an end of day close back below 130. And as I said, head up to around 180, maybe as soon as the end of this month. On to Empyrean Metals, which I interviewed yesterday, and the shares have actually gapped up after the interview. And that's the second gap we've had, unfilled gap to the upside we've had in the recent past. Bear trap gap reversal below 1.7 pence was a decent signal, and breaking through the 50-day line at 1.9, also decent. Above the 50-day line, we're looking for the top of that rising trend channel from this time last year, as high as 3.4 pence by the end of the month, and hopefully a bit sooner. Moving on to a stock which is tantalizing us at the moment. Looks like it's base building, but we've had at least a bear trap rebound from below 0.79. Above that, we're looking for Empyrean to head back to the top of that falling trend channel from back in January, as high as 1.34 pence. Maybe as soon as the end of next month. Bullish divergence there accompanying the bear trap, and that is all looking quite healthy. In fact, we had a gap fill rebound from the December gap floor at 0.7 to get things started there. On to Gfinity, which has been a problem child over the last, well, as far as you can go back on the chart, really. Here, just the first hint that we've escaped the downtrend with the breakout of a falling wedge basically yesterday, and the best case scenario here probably is that we would head back to a resistance on the way down around 0.09 over the next 2 to 4 weeks. If you're cautious, you'll probably wait for the RSI to get back above 50 versus 34 at the moment, but obviously hoping there are no new lows there below 0.06. On to Greenroc, which is looking a bit more encouraging at the moment. We bounced off at a bear trap rebound off a rising 50-day moving average. We've already got the 200-day line rising. We actually had a golden cross for the shares last month. That suggests that we are on our way to the top of that broadening triangle from August last year, as high as 7 pence, and we could see that maybe as soon as the end of this month. In terms of the trigger point there, if I can draw the line properly, then you can see that we've just broken that line there from last month, as along with the 50-day line around 4 3/4 pence, above 4 3/4, looking for 7 on Greenroc. Another new name for us, which is appearing today, Impellam. Here we've got through that beautiful triangle consolidation, which was in place since last September, above the resistance line there around 710 pence. Looking for the shares to move to the top of that rising trend channel from September, as high as £8.50 as soon as the end of next month. On to Kodal, which seems to be making the right noises at the moment. We had the gap close buy signal. That was on the 3rd, which I believe was Monday, and sort of confirmed with yesterday's price action. Today, nice leap for the shares, and did suggest that we needed to break that line of resistance around 0.66 on an end-of-day close basis to give us the initial 50-day moving average target, which is at 0.71. Above the 50-day line, looking for as high as 1.1 pence, which is a 1-year resistance line projection, and not really expecting the shares now to fall back below May support there, May neckline support around 0.6, so above 0.6. Hopefully we're on our way to 1.1 pence, and watch that RSI to hold above the neutral 50 level over the course of today, maybe tomorrow. A stock which makes its debut here today is RC65, or RC365 rather, and here we've got a rising trend channel. It's obviously a rather strange chart. I'm sure the spread is abysmal, but we've got a rising trend channel there stretching towards as high as £1.70. expecting the progression within this trend channel over the course of the rest of this month, and upside value while we hold above the initial peak there around £1. So it's obviously rather probably will be a widespread and also quite a volatile situation, but worth noting anyway. On to Supreme, which is another debutante on the bulletin board heroes. Here we've got a chart very similar to Impellam with the massive unfilled gap to the upside. Here we're looking at £1.30 as a best case scenario near term. Maybe we can upgrade it afterwards in terms of the target, but August resistance line there up to 130, while we hold above recent resistance, April resistance, around £1.11. On to the last two, and stock which appeared yesterday and is now around 32% higher, which is obviously quite a result in these markets, so feeling quite smug about that. But here we can see that the view that Tintra was in a rising trend channel base has worked out. The top of the channel are in our initial target around £1.24. Next target is probably going to be towards the 200-day line at £1.58, and hopefully we could see that by the end of the month if everything goes well. In terms of the stop loss at the moment, probably just looking at resistance on the way down around 105, but obviously that is giving away a lot of the potential profit on that. But see if we can have an end of day close above the old May peak at 117. So ideally there'd be no break back below that. Finishing off with Univision, which has probably got one of the strangest charts around. Not much to go on. Obviously, the historical situation there not quite so relevant, but it looks as though we're in a broadening triangle base, and an end-of-day close above 0.25 could take the shares up to 0.4 on that particular situation. That's it from me today. More updates tomorrow.